Whether you're looking to grow your savings or secure your financial future, you're in the right place. In this video, I'll be diving into the age-old question, should you save or invest your money? So buckle up, grab a notebook, and let's get started on your money-making journey. Before we make any hasty decisions, let's take a quick trip down memory lane. Have you ever wondered why we're so encouraged to save in the first place? Well, it's simple really. If you save your money, the person or institution you're saving with will reward you with an interest rate. For example, if you save $1,000 with a 5% interest rate, at the end of 1 year, you'll have $1,050. But wait, there's one crucial piece of information we need to take into account. That's right, it's inflation. Before you make any decisions about what to do with your money, it's crucial to keep up with inflation so you don't lose value over time. Sure, a 5% interest rate may sound great, but if inflation is at 10%, your real rate of return is actually negative 5%. It's only recently that saving has become almost pointless, especially with inflation sky high. Investing hasn't been a walk in the park either. In fact, 2022 was a nightmare for investors, with a 20% drop even for a well-diversified portfolio with bonds. When you factor in inflation, saving might have been the better option, at least in 2022. If only we had a time machine to go back to the end of 2021 and just sell everything. So how do we choose between investing or saving? We can't predict the future, interest rates, or inflation. It all comes down to two crucial factors: time and risk. You see, as we all know, nothing in life is free. If you want a little extra jingle in your pockets, you've got to give up access to your cash. For example, if you deposit your money in the bank, they might give you 4% interest, but they'll only do that if they think they can lend it out for more, like 5 to 6 or even 7%. Banks, just like us, want to get a little something extra too. But these interest rates are highly dependent on the base rate set by the central bank, like the Bank of England in the UK or the Federal Reserve in the US. The base rate is the lowest possible interest you can get with almost no risk. Now, if you're thinking about investing instead of saving, you want to get a better return than the base rate. Because investing is a riskier game, you could lose a large chunk of your money. So you want to aim for a better return for taking on more risk. It's a little like gambling, but with a higher payout. With low interest rates on savings and barely a 1% return, investing in stocks seems like a no-brainer. After all, who wouldn't want to potentially beat that measly 1% with the stock market's average of 9 to 10% returns over the long haul? But with saving rates suddenly looking more and more enticing, the risk-reward balance of investing is starting to shift, and lots of new investors are thinking twice about jumping in, especially with the fear of further market falls. So what's the answer? It all comes down to your personal views on risk and what you expect in return. And remember, high risk doesn't always equal high reward. You can achieve great returns with a well-diversified portfolio without having to bet the farm on a single stock. Time to talk about the second piece of the puzzle, and it's a big one. Savings has its perks and its pitfalls. You know exactly what rate you'll get. It's set in stone and usually protected by law, especially in developed countries like the UK or the US. Deposit your cash, leave it for a bit, and voila, you'll get your interest. Currently, some rates in the UK are as high as 7%. Can you believe it? If you're looking for some decent returns, get on that. But here's the thing, there's no limit to what you can earn with investing. The market can return double-digit returns year after year with no ceiling. The catch? It all comes down to time. Here's a little secret. The more time you have, the more money you can make with investing. In fact, history shows us that the longer you invest, the greater your chances of making a profit. Even if you have the worst timing possible, if you stick it out for 15 years, you'll come out on top. Okay, so savings versus investing. It all comes down to two things: your personal risk level and the amount of time that you're willing to invest. With saving, the interest rate is set in stone and you'll always know what you're getting, but there's the threat of inflation. Investing, on the other hand, has the potential for sky-high returns, but also the risk of a downturn. Both savings and investing can benefit from the power of compounding, interest on interest. And you don't have to make a one-time decision. You can do both or neither, depending on your circumstances. If you ask me, the key is finding the right balance between savings and investing that works for you. The beauty of it all is that you have the power to make the best decision for yourself. So what are our options here? Doing nothing is always an option, but holding onto your cash without any interest means you're taking no risks and missing out on potential rewards. Now, saving may offer some guaranteed results, but keep in mind that inflation is the real enemy. Even with a savings rate of 7%, it may not be enough to beat the UK inflation rate, which is currently around 10%. Investing, on the other hand, has its own set of challenges. The world doesn't seem like a fun place to be investing in right now, but remember, the stock market isn't the economy. Anything can happen, and even if the world seems to be falling apart, the market could still rally. But it's important to remember that there's always risk involved, and the downsides can be painful. If your time horizon is short and you're a conservative risk taker, savings is the way to go. Stash some cash for a house, an emergency fund, or a dream vacation. Take advantage of the decent rates available now. But if you're in it for the long haul, investing is the way to go. Ideally, we're talking a minimum of 3 to 5 years, and the longer the better. Historically, investing in assets over the long term has been the best way to beat inflation. Sure, you might beat inflation with savings in some years, but investing is more likely to get you there. So it's up to you. Decide what your time horizon and risk tolerance is, and make the choice that works best for you. With better interest rates than we've seen in the last decade, the time is now to make a choice. Will you be saving, investing, or doing both? Let us know in the comment section down below, and if you enjoy this video, don't forget to smash those like and subscribe buttons, and I'll see you next time.